will be one of the most important day trading video you ever watch, as I am going to run through step by step my thought process so that you will never miss a trade like this on Friday again. Now, this was at least a 5-point move. So I'm going to run through step by step on what to be looking out for, how to be planning your trades so that next time you do not miss out on this again. Now, if you take a look at the 30-minute chart, this was exactly what happened, right? We had a head and shoulder formation out of this top of this buying channel here of a very strong resistance level that we were prepared for, that was trying to break through this certain neckline support at this level. Now, we were prepared for this right here at 10:50 a.m. We were already prepared for this. Take a look, right? We were prepared for a possible head and shoulder formation forming from this resistance here with this top neckline here at this top channel right here in order to test the neckline. Look, exactly what happened, and we already saw it happening and prepared for it at 10:50 a.m. and 10:50 was even before this candle was formed. And so many of our members managed to get the trade here. Fantastic work, and that's all because you were prepared to take the trade. And more than just preparation, in this video I will be running through step by step the structure and also the thought process, as well as the techniques you need to be looking out for when preparing for this trade right here. Now, first things first, it's very important that you pay attention, Discord members, to pre-market brief every morning right here, where we've already prepared the important levels, and you realize these are the important levels that help us to plan our trades right here. Look, we were already prepared for it even before the market starts, and it was only when we started seeing some clues that the market was giving us, and I'll be running through minute by minute how you should be planning for this trade here. So let's start from 10:50, where we saw the possibility of this trade happening right at this point in time right now. Now, we already established there was a certain buying channel right here, and you can see we already knew there was some sort of buying channel here. Now, if you want to be buying puts, there's always a possible trade you can be taking when it is at the top of the buying channel. Why? Because you can always ensure that your stops are tight right at the channel. Now, the only risk that you may be having is if the chart continues to hug the top of the channel like this, and you will always progressively get stopped out. So I don't always recommend taking trades right at the top of the channel until you see some sort of rejection or you come near to some sort of resistance. So seeing rejection is very important. So let's see the candles running, and this is where you start seeing certain rejection like this, right? So when you see large candles coming in, now the first thing you have to pay attention to now is to know where the previous resistance was, right? So now this was the resistance at the head here. So if you want to be taking a trade, well, without structure or without much confirmation, now this is probably a good place to put your stop loss. Now, it's still a little bit too far away in my comfort level. If I were to be putting a risk reward window right here, now this wouldn't be such a good trade, right? Because your stop loss is up to this amount, and your rewards, especially when we identify where the possible support level is, it's only a 0.72 risk reward ratio. This is certainly not where I want to be opening my puts, not yet anyway. But what you want to be paying attention to now is the possibility of this secondary resistance, right? You saw that there was a previous resistance here that was part of this buying channel. We want to see if this resistance holds as it forms this right shoulder. This is the infamous head and shoulder formation. Right, so let's take a look if it forms, right? So if you want to be taking puts, if you see some sort of resistance forming at this yellow, right? And right now we have 3 candles forming. It's good enough. It's safe enough for you to take a trade like this, right? So I would most probably be taking my trade here, my puts here, when I see a possible head and shoulder formation forming. You want to know where are the possibilities that you will be facing some bounce. Now, the first place that you may be facing some bounce is at this support level here. How do you identify the support? When you see this previously right? This was the neckline of the support here at this pink 415 level. So this is a very important level you want to be paying attention to. Secondly is this channel right here, right? Because we are at a buying channel, there is a possibility of bounce here at this channel. Now, this is what I mean by structure balance. Now, you see resistances at this yellow, you would most likely think that this is a possible resistance. Why? Because you had a head here, you had a rejection candles here, right? These are sellers in action. Because if it's buyers trying to drain off sellers, what you will possibly get will be a controlled selling channel, which may happen, right? So we have to still properly chart a possible selling channel, which you will see later. Maybe it would happen, but here I would take puts. But I know that when the candles start hitting this channel right here or hitting this support level right here, I need to protect my trade by taking partial profits and adjusting my stops to break even for the rest of the contracts, right? So that's very important. You have to prepare your trade for. You cannot be assuming that this goes all the way down, because obviously there is going to be buyers here, there is going to be buyers here, and you already see it coming. So now the candles continue to head down. Yes, this is what I want to see, right? This candle right here, right? It's a good candle, right? Normally, if you see a large candle like this, well, in the grand scheme of things, it's only a 0.3 point candle. But that's the thing. When you are at this point here, into the channel, right? This is at the most a 0.5 point move. This is what the structure demands. The current structure is like that. So you cannot be expecting more. You have to protect your trade by 0.5, by 0.4, right? So let's see if it continues to head down. And this is great, right? So once this candle forms, right, immediately off this support level, we knew that, right? When that candle formed right there, you have to take your partial profits, right? So this is great, right? This formed, we saw the secondary resistance, you took your puts here, right? And that candle formed, you had to be ready, and you took a 0.6 point profit off your partial profits right here. And thereafter, you have to start protecting your runners and adjust them to break even. Right now, we have to see stress-free now if this continues to break through, and it doesn't, right? Started bouncing off when we expected this bounce, isn't it? We expected it from this buying channel. We expected it from this neckline support right here. So you don't have to wait till it tests this line. This is a good enough large red candle. You want to be enjoying the counter slippage. When a red candle pushes, that's where you want to be closing your puts, because at that point in time, there's momentum and your contracts will be slightly higher priced than usual. So now it bounces up, it'll probably, got rejected again, that's great. So you see another rejection, so you now can keep your runner quite stress-free, and we see if it breaks through. Right, we have another big one and it bounces back up. Yep, that's it, you'll probably get stopped here. But you still enjoyed a 0.6 point move because you understood the structure balance. And you notice, right, after several more candles, you notice the bounce is off this buying channel and also off the support. So this first trade here, you would have already gotten 0.6 point profit, and you understood how the structure balances. You understood there is certain confirmations that you were waiting for to be taking. And now let's see chart continuing. Now at this point in time, you don't want to be chasing any trades. Why? Because we understand that the chart will still probably be moving within this channel, right? And there isn't any clear structure, right? And this is just possible 1 point chop within the buying channel. So what you want to be seeing is to see if the channel continues to push up here, or do we start to reject, we break the channel, and we will see how it goes. So no need to be forcing a trade here when you don't see any certain structure and this rate the candle comes in. Right now, this is great because it's telling me that there is certain weakness at this level here. Do I want to be taking a trade here yet? No, not at all. Why? Because I don't see any clarity here, right? The shoulder has already been resisted and there was failure in that resistance, so it brought itself back up here. But we did form a lower high, right? So it's possible that this could be a controlled selling channel, and that's something I want to be paying attention to later, right? If it forms. So don't be forcing a trade here yet. But however, we see that there is still a secondary resistance here. So maybe, just maybe, if we do reject under this, maybe I'll be taking puts only then. No need to be chasing puts here, right? Wait for more confirmation. And let's carry on. While we push down, that's great, but it pushed back up. Now, if it pushed down here, bounces off yellow and also underneath this buying channel here, right? Which we bounced off as previous support. If we bounced off like that, this is where I may be taking puts, right? Because we formed another head and shoulder pattern, and that was double confirmation because previously we had a head and shoulder that didn't push through, but we had a lower head. And this means sellers are probably in control. And I want to see another head and shoulder that's formed that maybe we retest this support level as well as the bottom buying channel again where all the buyers are situated. But in this case, we bounce back up off yellow, so it's not good. So don't force a trade now. Let's take a look. See, it's still bouncing off yellow, right? Perfectly still bouncing off yellow. This is still bouncing off this buying channel, you notice, right? So no need to be forcing a trade even though they are red candles. So don't be looking at candles, look at price equilibrium based on the structure. Now, in this case, we're bouncing off this channel. No need to force a trade. And why are you not taking calls here? Right? Because I expect sellers at this resistance level where we had a previous rejection. This has already rejected previously, right? And it's rejecting here now at the secondary resistance. So I can expect lots of sellers to be defending this level. If you want to be taking calls here, sure, but you have to be taking profit by this level. Now, is it a worthy trade? Is there very good risk reward right here for a probably 1 point trade? Now, if you need to take this trade, fine. I think it's not too bad when you can see so much bounces off this yellow level as well as this level, but you need to know you need to take decisive profits here, right here by the high of day as well as by pink 416. But otherwise, if I want to be looking out for calls to break out of high of day, maybe I'll be looking out for a possible controlled selling where I see a bull flag that it's forming, or I see a clearer inverse head and shoulder pattern, for example. So let's see, it continues to climb up, right? But lots of engulfing red candles when it climbs itself up, right? See, that's exactly what I mean. If you took calls here, right, you knew there's going to be selling here. So you have to see where the structure is going to balance. Now, it's not a bad place to be taking calls here because you see the defense of yellow as well as the previous defense of this channel right here. But is it worth your time to be in this choppy trade for maybe 0.8 points? Maybe not, right? So a million ways to trade, possible trade you can take here, but you just have to be cognizant that this is where you must take most of your profits. Now let's see if it bounces up the buying channel right here. No, it didn't. It didn't bounce. Maybe it did. It's off. There you go. It bounced off this yellow support level again. So as I mentioned previously, right, when I wanted to see a head and shoulder form again, I wanted to see this yellow and this buying channel form resistance. That's where I have extra confirmation on this follow through of this head and shoulder. Now it bounced off this yellow again. This is a sign that no, I am not going to be taking puts right here. Now conversely, is there a structure for you to be taking calls now? Absolutely not, right? This is just a chop. Right? This is just range bound sideways trading. Apart from knowing that there is certain support here and support here. Now these are just your confirmation to be taking calls. I don't even have a clear structure to know that bulls want to be pushing out of this range yet. It's just support levels, right? So there's no clear structure for me to be taking calls until the high of day. So I'll just let this go. And if we do form a clearer structure later, maybe when we are out of high of day, maybe off pink and off this channel here, and we push up with a clearer structure here, maybe a controlled selling, maybe an inverse head and shoulder. I want to be seeing certain structures right here before I start taking calls. So just be patient, set your alerts here. We'll see if the chart goes to that level. So right now, it's still chopping within the range, right? Without any clear structure. You don't see any clear structure here. It's climbing up, you notice. It's just bouncing off this buying channel, right? This buying channel in this yellow, exactly where we already determined. And it bounces up to pink. Now, this is where I need to see. If it breaks out of pink and it forms a retracement, no, it didn't, right? There is a certain rejection right here. Now, if you want to be playing levels, right, and you can see how reliable our levels is, right, this pink 416, and that's where we were prepared for a possible head that's forming right here, and we see the rejection started to form. Now, this first rejection candle broke out of this buying channel. Now, that's the first sign of weakness, right? So we want to see continuation coming out from this. Now, you don't chase puts yet, not yet, right? Wait for more confirmation, wait for this channel to break, and we want to see more confirmation then. The second one, this is great, right? Just take a look for yourself. Perfect bounce off this buying channel that we prepared for, as well as this yellow. So if you were taking puts based off the level right here, once again, this is where you want to be taking partial profits, right? You want to be ready to be taking partial profits right here. Now, this is certain rejection. High volume selling, this is rejection right here, right? This is not controlled. It means the buyers are no longer in control. The sellers are coming in, right? They want to be rejecting this level. High volume selling off the top level here where we previously had some weakness, right? You saw some weakness earlier and now we see the weakness again right here. So right now, what are we waiting for? Previous head here, which was the previous resistance. Now you see the shoulder forming at the previous head, right? So now this is the secondary resistance we want to see. So this is a head and this is the shoulder, right? If this is truly a rejection, you will see the bounce here because we know there's going to be buyers here, right? So we want to see a certain bounce off and maybe form a shoulder right here. If there's shoulder confirmation right here, that's what I want to be prepared for and we take the trade. Now, the question is, what if the sellers come in fast and furious and it doesn't bounce, right? It pushes itself out. So be it. You don't have enough confirmation to take a trade. If it bounces off, it will certainly retrace. And when it retraces, you want to be taking, like what I mentioned earlier. If this yellow and this buying channel turns into some sort of resistance and it bounces off here, this is where I want to be taking puts, right? But right now, because we saw earlier weakness here, right? See this head and shoulder? That was an earlier weakness. And now the previous head has turned into a secondary shoulder right here. So now I want to see this. I want to see this right shoulder form right here. Now that's the right shoulder form. Now, if you miss this trade, so be it. You saw that red candle, don't be chasing it. It may bounce, right? As I mentioned. And it bounced, it did, right? Right here. Now let it form. See if it forms now. Now we're testing this blue level. Now this is where you need to start paying attention to see if the shoulder forms. Now let's see if the shoulder forms. Yes, the shoulder forms right here. You see rejection. When you see this, this is rejection. Now there are a few ways to be trading this, right? The first way you want to be trading this is you want to see a rejection and you start to take a trade here with the stops at the shoulder level. Secondarily, you want to see if it starts to bounce back again before you start the trade as near as possible to your stop loss. So let's see where it goes. Now it goes down, that's fine. Should probably bounce off the channel, right? Now, here you go. Right here, where you see there's so much resistance off a secondary channel here, this is where you need to start to take a trade. Here is where you need to take a trade. Now, if it's too close to comfort from the channel here, what I would suggest that you do is to wait for a large candle to break out of this channel. Now, if a large candle breaks out of this channel, this is where you will take the momentum trade, right? Otherwise, as I said, wait for it to retrace back here and you can take the trade here as well. If you miss the shoulder here, which formed perfectly, take a look. Perfect shoulder, right? So you see head and shoulder already forming. Why? Because we previously had context of a head and shoulder and now another form of weakness. Now, head and shoulder is always a sign of weakness. It's a sign that the market is rejecting a level. This is why there's rejection of the head and the forming of a secondary shoulder. This is a rejection. Twice, the sellers have agreed that this price is a great place for rejection. So therefore, when the head forms, this is just a rejection of range, right? So that's weakness. Now, previous weakness here has turned into another support like that, right? See, head and shoulder pattern, right? We still have to break through this, but this is good enough for me to be taking some trades right here for a breakout. Let's see. Remember, red candle or wait for it to retrace. If you miss the red candle, so be it. You miss the shoulder, so be it. Wait for breaking out of this buying channel, right? Because this buying channel, take a look. It's not tested since 10 a.m., right? We have been trading at the upper band of this buying channel. So when this channel is being tested and about to break, you know that the buyers have given up, right? So that's the first thing I want to be looking out for. If there's a red candle here, if I missed this head and shoulder, let's see. No, not yet. Now the red candle, great. So when the red candle forms out of this channel immediately, you're ready. You're ready for puts. Why are you ready for puts? Because you already saw this coming. No chance you're going to be waiting for calls here, right? So your order window will be ready for puts. Once this candle comes in straight, immediately, you're going to be taking a put. Now, what if you miss this? Now, remember what I tell you. If you miss this, so be it. If it goes down, so be it. Let it retrace. It will retrace some form of another. It will retrace back to yellow, or it will form some sort of bear flag and push down. So that's what we want to be paying attention to, even if you miss this trade. If you took puts here, right? And immediately we broke out of channel in a large volume red candle, immediately reward yourself. Take some profits here, right? Take some profits immediately, especially after every large red candle, because chances of a green candle after this red is very, very high. So you don't want to miss the chance of taking some profits here. Now let's take a look. Still going down, that's great. Turns green, right? It went back now immediately, right? As I mentioned, don't be afraid of missing a trade. Absolutely don't be afraid of missing a trade, right? It rebounds back to yellow right here. And that's when you know, right? Look at yellow previously. Support, support, support. If this turns resistance, this is going down, especially with all the rejection here. Right, let's take a look now. Yeah, double wick, 3 weeks, and there you go. You know for sure this is going down. There you go, it's going down. Again, another red candle. If you took a trade here, you have to protect it by the major levels, and just take a look how beautiful it bounces off this major levels right here. So you would have caught this trade here, right? And if you notice something very interesting, this trade has created a selling channel, right? Let me chart the selling channel right here immediately. Now, why is it forming a selling channel? Now, I'm really curious about this, right? If it forms a selling channel, you want to be careful, especially if you have puts, because if this breaks out of this selling channel, there are 2 scenarios that can be happening. The first scenario is that the sellers have lost control of this, and the buyers, especially from this very key support level at 414, are taking back control. Now, if the buyers are taking back control and break out of the channel, you have to close all your puts. No need to be holding them, right? When do we know our sellers are still in control? Now, we know sellers are in control if they continue some sort of controlled buying channel and they form a clear bear flag right here. So that's what you want to be paying attention to, whether we form a bear flag right here. Right, so remember, because we already formed a selling channel, you have to be paying attention to see if this selling channel is being respected, right? So let's see. Okay, broke down, no, got rejected at orange. So now you have to be paying attention. Does it reject itself off this selling channel? If not, you have to cut some contracts here for your remaining runners at least, and cut the other contracts off yellow here, because you know that the sellers are no longer in control. And we can reopen puts again, right? We will find another structure, maybe another head and shoulder pattern here. So don't be wasting the move here, because you're already, right? You have channels here, you already know what's going to happen. Right, okay, some rejection here, that's great, right? So still holding on to your runners, but then this happened, right? It broke out of the channel here. This is where you need to be cutting your puts. Now let's see, does it go down? Now we see some retracement off here, and it bounces back up to yellow. Now this is a little bit concerning, right? Because you notice we formed an inverse head and shoulder pattern here. Now I want to be seeing if this is a controlled setting. It seems like a controlled setting, but the range is just too small to be planning for a possible control setting. But I'm going to be charting the channels anyway, because I want to see if the sellers continue this buying channel up. If you're a seller right here and you met with some bounce here, right, where is a realistic place for you to start selling again? Right, obviously I will start selling again at 415, right, where there was previous support here and it turned into resistance. So here's a possible place for a bear flag, possible. Secondly, I would also allow for the buyers to go all the way to this very important rejection level here, where we met with so much rejection. So this is also what you call a possible supply zone, because you know that there are plenty of sellers at this level right here. So these are the 2 levels that I know if I'm a seller, I may want to be taking the buyers to before I start rejecting the price again. Now, so we have a selling channel here now. Let's see where the sellers are controlling the buying, or the buyers are breaking out and they are back in control. Right, so we have some rejection here. Now, it's not out of the possibilities of taking puts here again, right? So, but I mentioned earlier here, it's very difficult for you to be chasing puts here, right? You can take puts here, you can take puts here. There are certainly more confirmation than usual. Why do I not take puts here, especially if you're a fresh trade? Now, firstly, because we broke out of this selling channel, right? We don't know for sure that this is a possible bear flag. It looks like one, and there is a possibility you can take one here, right? So if I'm adding winners, I will add on here after closing my winners here, right? So if you close your puts here, you're waiting for another entry, right? Here's a good entry, right? So let's say I closed my puts here at $2.40. Now, right here is probably worth only $1.80, right? So this is great. You're making 60 cents profit just from opening a new trade right here. So that's a fair place to be opening your trades, even though we broke out of this selling channel here. However, if you're opening new trades, you need more confirmation, right? So right here, if I'm opening new trades, what sort of confirmation will I want to see? I would rather wait for another rejection, right? If I follow this buying channel here, I would rather wait for another head and shoulder to form, or when I do reject from this, I want to see it clear orange before I see some sort of retracement and take a trade from here instead, right? Because why do I want to subject myself to the possible risk of a chop here where I know there are sellers and buyers at this level and where I'm in a buying channel right now? I want to see at least myself breaking out of this buying channel, right? So if there's a certain retracement, maybe like that, right? Maybe I would take puts here, but not with such close range to 414, right? So in this case, I would wait for it to bounce off orange here. Here I'll be taking my puts, right? As you can see earlier, we bounced off this resistance, so there's no need to be chasing a trade. So right here, I will not be opening new puts unless I have previous puts that I took profits here. Now here's a reasonable place to be taking puts and then putting your stops near the resistance level, right? So let's see. I want to see this happening or I want to be seeing this happening, right? Otherwise, I will wait to see if this happens before I take puts, right? So there's no need to be forcing a trade, especially at the situation where you see a significant bounce off a buying channel, broke off the previous selling channel, right? So let's see if it goes. Nope. Now you see the problem here, right? So even if the previous red candle, it was still within the buying channel. So don't be trading with candles. You see the red candle, it doesn't mean that it's rejecting, right? Because it's still bouncing off this buying channel, still bouncing off this yellow. And you notice right here, this is why I don't take puts with such a small range here. It's not worth your risk and reward. So wait for rejection. This is what I want to see, right? Possibility of a head and shoulder if we do reject. So no need to be chasing, right? Let's just see if anything like that forms. If not, it doesn't work. No, it doesn't form. It bounces off yellow, right? So you see, this is why you don't chase puts, especially at this level after a significant bounce. So now let's wait for structure. So first structure we want to see is if this buying channel is broken, right? First thing, buying channel, if it's broken. And secondly, do we see some sort of retracement again? That's what I want to be seeing, right? So let's just see if it forms. We'll just carry on. Well, it's carrying on the buying channel. Some rejection here, right? This is where you see the certain rejection that's forming, right? But it's still not clear. Why? Because you don't see any head and shoulder forming here. Now, what sort of head and shoulder do you want to be seeing form? Right here. A possible shoulder formation here? Absolutely possible. Now, don't forget, this was the previous shoulder formation, right? So this is a significant resistance. As I mentioned earlier, right? This is the supply zone that we were anticipating, that the bulls, the bears will allow the buyers to push us to this range before a possible rejection. So if you're taking calls, if you manage to take some calls here, right? There's a million ways to trade. There's no right and wrong. If you know to take calls here after we broke through the selling channel, that's not a bad trade. But you need to know when to take profits right here. And if we broke out of here, to take profits by this supply zone right here. Still a very good trade if you're taking calls, right? So it's not a bad thing. As long as you are preparing with structure and knowing what to be looking out for. So let's continue, and we see it's starting to consolidate at this level. Now, when it consolidates at this level like this, you need to be seeing whether this is a continuation bear flag. Now, in this case, it's so difficult. I can explain why. This is literally a 0.3 point, 0.4 point move. Now, it's impossible to be ascertaining what sort of structure it is in such a tight chop. So in this case, you cannot be chasing anything. This is just chop, right? This is just a rounding error to many of the big boys. So you cannot be thinking of anything right here until we have clarity on pushing out. So if I were to be waiting for calls, right? Unless I see a very clear pattern, right? And there is some controlled selling here. So this is why there is this green candles here. But it has balanced itself. So you notice, right? Structures still work like that, even in tight range. You see, this is a beautiful controlled selling. And this is a bull flag. This is as simple as it is. It's a bull flag. But this bull flag has balanced out itself within the small tight range here, right? So this is still a valid move. So you want to be taking a 0.4 point trade, you can be doing that here. Especially if you're rushing for time, this is the only time you see this happening, right? But otherwise, you cannot be assuming that this will be going up yet. It's not a bull flag, it's just a chop. So what do I want to see from here? I want to see the possibility of a right shoulder forming. Otherwise, if we break out of yellow, remember, I want to be seeing yellow turn into some sort of resistance because this was previous resistance and we are rejecting the range again. So let's see if any of that forms. Right, not yet. There you go. Now this is what I worry, right? Large red candle, you miss out on the possibility of a head forming. Now let's see if it bounces back to form the head. If not, if you miss the head and shoulders, you're not too worried. Why? Because you may see this possibly happen. So we just have to prepare ahead, but you know that this is a very important level right here. There you go, going down yellow, then bouncing back off again. So this is why you don't chase, right? You imagine you chase the trade before it closed below yellow. You're just gonna get stopped. So 1 minute candles are very, very noisy. So you have to be basing it off all these levels. Don't be taking trades based on candles. And as I mentioned, right, if you miss the trade here, so be it. There will always be certain retracements. And if the retracements doesn't happen, not clear anyway, focus. There will always be clues later to pay attention to. So we get a rejection here again. And this is where you need to be taking your puts, right? So after that red candle, and you see there is a certain top wick here, this is where you need to be taking your puts, because we engulfed this green candle. This is a clear rejection with such high volume as well, right? Just take a look at how much volume there is. So this is a clear rejection, and when it bounces off to yellow, this is where you need to be taking your puts. Now, it will still bounce maybe, right? But this is it, right? You know that when this engulfing happens and you see this wick here, now you can't even take your trades off this wick, but you will prepare your stops at this yellow, right? And we were all prepared for this level, right? So this is where you need to be preparing yourself. So when did this move start? This move starts when we already have this buying channel here, right? It broke out of the buying channel, and you want to be seeing if the bulls continue to have some sort of continuation. We didn't form any sort of bull flag here. Maybe a little bit, but it pushed and it balanced itself right here before we started rejecting again. If we were to be paying attention, this is a very, very tiny head and shoulder pattern, but this is a rejection nonetheless, and it's an overextension of this bull flag. This is no longer a bull flag, right? Bull flags, you want to be seeing some sort of selling like that, right? Or some sort of selling like that. But when you see, you break it down, you see controlled selling. Yes, we have the bull flag here, but it was rejected at this blue, and we have another small rejection here. This is when you know that there is certain type of rejection. But I would never be taking puts here, right? Even though we know there's some sort of supply, I would be waiting to see some retracement of yellow, or better still, if we have some retracement of this purple level, which didn't happen, and that's fine. But we had this engulfing and we had this retracement right here, right? This is where you have to jump in on your puts right now. And this is, I think this is it. Yeah, it went all the way down. This is it. So this was the major selling action that happened, especially with such large momentum, and it went all the way down. Now, if you missed this trade, that's fine, right? I would be waiting for some sort of retracement of orange or some sort of bear flag that will be forming. So let's see which formed. No retracement back to orange, and that's fine. And then we see a possible selling channel that's forming, right? So this is where you will see a continuation of a bear flag right here, right? Especially after much selling, you have continued selling in the selling channel here, right? This is where you will need to be taking continuation on the bear flag right here. And let's see if it happens. Yep, there it goes. Now, if you miss this again, that's fine, right? Especially when we broke through so many key levels and we are already balanced with the structure, right? This was the previous congestion right here. So you can expect there will be some sort of buying to be defending this level right here. So if you miss the trade up to this level, you have to stop chasing, because you know previously 413 was a very important level that bounced off, right? And we had so much congestion here to reject back up. So this is going to be a congested area here. So I will no longer be chasing puts here if I missed it, right? So this was the last good place to be chasing your puts. After this, I'll be waiting for some sort of retracement, or in this case, you see some sort of selling channel, a continuation. And if you see a selling channel, you want to be taking your puts as close as the top of the channel as possible, right? So let's see. Yep, we started congesting here, right? So there's a certain congestion right here. If I were to end the replay here, yep, you see we congested here for a good 3 hours in the afternoon, right? So there is a certain congestion here. But if you were already in puts early, right, this would have been a dream for you, because take a look. It's just controlled selling channel right here, right? So if I were to chart a clearer channel, and you would just be able to nurture your trade accordingly. Look, beautiful, beautiful, beautiful channels right here. So beautiful, right? This would be where you will be taking more profits, right? Because it broke out of the channel. It's a breakout. If you had puts here, for example, this is where you need to take most of your profits. Wait for it to bounce back up, and you can take more puts here as well. So this is stage 3 of the ebook that I was talking about. Right, so Discord members, if you have not downloaded the ebook yet, I talked about this, of how you need to be taking profits and nurturing your trades based on this channel. Right, so this is a longer video than usual, but if you can understand the thought process behind it, now apart from preparing for the trade like this, because right, we were prepared for it since 10:50, but how do you properly execute the trade? So this is the thought process behind it, using structure, so never miss a trade again. Right, if you want more of such content, I do this every single day in the Discord server. I do it live right here with the explanation. So all you got to do is just review it at the end of the day with all the links to the live explanation that I did then right here. So all you got to do is just click and you will go to the live analysis of that day's trading day or the explanation right here. So this video is just a summation of the thought process. I'll just put it in the video so you have something to be basing and visualizing my analysis. It will help you as a springboard to all the daily analysis from now. So thank you for taking the time to watch this. I hope it really helped you. Thank you very much. I will see you in the next video.